Get some quick audio and video check action going on here. Make sure you can hear and see. That would be fantastic. Also wanted to let all of you know that we are using the Q&A feature of Zoom tonight, so not the chat. But if you look up at the top of your screen, you'll have a little option for the Q&A where you can ask questions and receive answers. Sherry, you can. Bob, all good. Excellent. So welcome to the webinar. Really appreciate y'all spending your evening with us. I want to go through a couple of quick house cleaning items and that y'all, this is absolutely being recorded, and we will be sending out a link to view the recording later on tonight so you can review it at your leisure. We also have a very thorough and well planned out presentation this evening, and during the course of the presentation, you may notice that some questions that you have may be answered in the normal course of the presentation. So if we don't answer your question immediately, we are absolutely not ignoring you, but we will absolutely get back and help you out at the end of the webinar. So thank you very much. Appreciate you being here. Without further ado, let's go ahead and turn things over to John.
All right, fantastic, Daryl. We've got the everything should be up and running here. Let me just do a quick check and make sure that you can see my screens, you can hear my voice. That's always 94% of the battle. Excellent. So, I got a couple of quick questions for you guys before I get started. One is that, so the idea of tonight was to kind of be a supplemental class / webinar to the one I did last week. So the first question is that how many of you did not see the webinar that I did last week? Just to get a sense, just so I know kind of where we are and stuff like that too, and all that too. Okay, so a couple have not seen it, and some have. First time. Okay, actually more first times than I thought. All right, so that's fine. We'll do that. What I'll be talking about, I mean, generally today, there's a couple of things. There's a couple of things I want to be talking about, but a lot of it has to do with just the nature of the current markets and kind of what's going on and the best way to read them and all that kind of fun stuff. And what's going on right now, just so you guys know, is a battle in the markets between kind of two forces. And one is that we do have, for those of you that are familiar with the term, we do have a squeeze that's setting up on the NASDAQ. And all this means is that we're expecting a really big move either to the upside, up to 60, 70, or to the downside to new lows. And what we're doing is we're looking for situations that help provide clarity as to which way it's going to go. Because sometimes we'll get signals and it's very clear. It's like, oh, okay, this is an upside continuation, or this is a downside continuation. And other times like this, you've got a lot of mixed signals, okay? And by mixed signals, I mean, if you go and you look at the transports, you'll see that the transportation sector is already rolling over, right? But if you go and look at Apple, Apple's doing just fine. So which is the one that's going to win out? And so what we want to do also is just understand kind of the nature of this market. And the thing about a market like this is that it changes from one of, you know, where it was for a while, it's fairly simple. I mean, these are the easiest markets to trade when you get a very clear long signal like right here. And then you just buy and you hold on and you don't actually really need to do too much. But then you get into a situation like this where and we're coming into September and October of towards the, you know, the last third of a decade. Those are typically very, very volatile, and the odds increase significantly of kind of a mini crash. So again, the squeeze, very, very significant. We're looking that the NASDAQ could go down to 54.27, or if it's a failed squeeze to the downside, we pop up on short covering up to 60.70. Okay, and what we want to do is we want to get in front of that. And the worst thing that can happen in a situation like this is that people, they read something and they get convinced that the market's going down when in fact it's not. That's how you get destroyed. Or worse, that it's going up and you load the boat long, but you miss a clear signal that it's going to go to the downside. So tonight I want to talk about, the nature of this current market and how and why it's changing and how to adapt to it. And then just some tools that'll help out that you don't necessarily need, but you can look at it and say, oh, okay, well, that would make it easier, but I could just look at the price and that would be fine too. So either one's fine. So since some of you have not seen this, I'm going to go through a couple of slides here. And then what I want to do is I want to dive into some case studies and some current examples from what's going on in the markets. Okay. Yeah. And actually, we'll look at the skew and a few things like that as well. So real quick. So the goal with this is at the end of the day, and I was just talking about how, well, we've got this situation where the squeeze could go up or down. Now, I don't know about you guys, and I'd actually be interested in this too. I was just talking about the NASDAQ potentially going up or down. In fact, let me bring up that chart again. And Daryl, I think what I'd like to do here is queue up that poll, if that's something that you can do. So if you guys will see a poll come up right now, we've got the signal here, and either one like the market here is not going to do nothing. It's either going to go to 60.70 or we're going to 54.27. We may not go there exactly, but that's the path it's on. And so if you see that there's a poll we just put up and said, will the markets rally or sell off into September? So into September, if you think they're going to rally, they're going to do that. Or if you think they're going to sell off into September, they're going to do that. And if you just want to do a quick poll, and we'll get a sense of at least how, as a group, we're feeling. Are we bullish the markets, or are we bearish the markets? So we'll take a few moments there. Oh, perfect. No, thanks, Daryl. Okay, so right now, great. If you guys fill it out. All right, so right now, according to everybody that's taken the poll, 70% of us think that the markets are going to sell off. Okay, so we want to keep that in mind. And we're going to remind me about this when we talk about internals, okay? Because 70% of us think that the market's going to sell off. And, there's a couple of things to keep in mind. Either one, 70% of us are right and the market's going to sell off, or two, the sentiment reading is too bearish and it's time to rally, right? So that's the kind of stuff that we want to look at, and that's the kind of stuff that can get kind of fun. Yeah, and I'll talk about what I think the market's going to do as well, and we'll definitely get into that. So, so from there, so let's go ahead here. And so, since some of you guys did not see this, I want to go through some of these really quick. And the reason this slide here is important is that what we want to keep in mind, okay? We want to keep in mind that, yes, the market could go up or the market could go down, and we're going to talk about some tools to evaluate which way that could go, okay? But what we want to be really, really careful is the level of conviction we have of that happening one way or the other. Because if we have absolute conviction that this is going to go lower, but it goes higher, we're going to destroy our equity curve, okay? But on the other hand, if we have absolute conviction that it's going to go higher, and we trustingly hold longs against all odds and the market crashes, that of course is also going to destroy our equity curve. And our only obligation in trading is to do whatever we can, whatever it takes, to make sure that our equity curve goes from the lower left to the upper right of our screen from the beginning of the year to the end of the year. That does not mean that it's going to go straight up. There are going to be some times when it's choppy, when there's little drawdowns. But overall, we want to stay on the path of least resistance at least 70% of the time. Okay, so 70% of the time, overall, our trading ideas are working out. We're letting our winners run. We're keeping our losses small. That, at the end of the day, is what we're here for. So we want to be careful of being right. So we're going to go through this here because I want to get into some of the stuff that we're talking about today. For those of you that are not familiar with options, this is kind of an example of what is possible. It is possible to buy 10 options for $2.70, which represents an investment of $2,700. And in this case, have that go to 110, which is a profit of $107,000. Now, I'm the first to say that is not going to happen all the time. That's obviously an incredible 50x move. But there are plenty of opportunities where you can buy options for $2.70 and sell them for $4, okay, or sell them for $5. And we want to be able to make sure that we can take advantage of that and time those markets correctly. Or also, if you trade futures or if you trade currencies, or frankly, if you trade cryptocurrencies, what are some tools that can help you catch those moves consistently, okay? So, and it doesn't matter up or down. So that was a call. With options, of course, you can also buy puts. This was a bet that Priceline was going to go down. It did, and it turned into a nice 7x winner. So the idea with this, and what I want to do here, I'm actually going to fly through this stuff because what I want to do is really talk about where we are in the current markets. For those of you that don't know, why am I able to talk about this? This is a little bit about me. I wrote a book back in 2005 called Mastering the Trade. I've done a lot of speaking and stuff like that on trading. It's really my passion. I've let's see here. But really, at this day and age, I've got kids, so I don't really want to travel that much anymore unless they can go with me. And so now it's really spending a lot of my time just doing what I can to figure out what's going to happen next in the markets. Okay, and this is what I enjoy doing. This is my office, or representation of what my office looks like. We had moved offices. But I like looking at the markets and just trying to gauge crowd psychology. What's going to happen next? What's the probability of a move going higher or lower, so I can take advantage of that? Because when you get in there and you can get on the right side of the market 70% of the time, and that's a skill that you can develop, it means a lot of good things, okay? When you develop your skills as a trader, it allows you the freedom of choice. It allows you can trade when you want to. You can have control of your time. You don't have a boss to answer to, et cetera, but you've got to be able to develop the skill to do that. Otherwise, you're just flipping coins. So, and you guys can look at that stuff later, but let's just dive into this. So the thing about home run trades, and that's one of the things I was known for, is 2 years ago I did this day trade in Tesla and I made $1 million. And look, don't get me wrong, that was great. And I want to show you and talk about kind of why I was able to hold on to that trade, because that's hard, right? And I'm a big believer in turning these things into tangible assets. I took that Tesla trade and turned it into a tangible asset. That's where we live now. And so the idea with this, though, and while it's sexy, is that you don't need home run trades to generate some decent profits in the markets, okay? Yes, think of it as a bonus when they happen, but we also want to kind of keep in mind that we've got the potential for another trade like this to the downside, because if these markets roll over, it is going to be a big trade. That is potentially going to be a 10x to 20x trade if you're doing options, and we want to keep an eye on that. We don't want to miss out on that, because that is a trade that could make the entire year. Being on the right side of it and being on the wrong side of it could destroy a year's worth of profits and efforts, okay? And we just want to keep that in mind. And the nice thing about this is, because we're not large funds, because we're not trying to manage billions of dollars, we have the flexibility to get in and out of these trades very, very quickly, okay, with the push of a button. So what is the key with this? The key to this is, right now, is understanding that the markets are changing, okay? And I don't mean that, for a couple of weeks they're choppy. No, the nature and the structure of the markets is changing. And we're going to go over that specifically, and I'll show you what I'm talking about. But we've got to keep in mind, especially if you've just been trading this year, bull markets are easy, okay? Bull markets are forgiving. They go up slow, okay? It doesn't really matter where you get in, okay? If you get in here and you got to hold through a little bit of a pullback, that's fine. You make money on the next new high, right? On the next swing high. The easiest trading in the world is a slow bull market, buying in the money options 30 and 60 days out and just sitting on them until they're up like 50% or a double, okay? It's not rocket science. You don't have to worry about timing. You don't have to be precise, okay? And that's the market that we've been in for a good chunk of the time since since after the election. And when the markets structurally change, we've got to take some things into consideration. Okay. And when the markets that we've seen, they're slow and they're steady, and there's a lot of room for error. Okay, you can make mistakes, and a lot of times you'll be fine. As long as the weekly and the daily charts are in alignment, you just buy the dip and wait it out. Okay, but the question is what happens if and when that dynamic changes, as it has? So when the markets change and bearish sentiment and distribution start to emerge, okay, and we saw even tonight, 70% of us are bearish on the markets, trading styles have to adjust, okay, and there's a couple of reasons for this. In a bull market, typically if you're a swing trader, okay, and that's kind of my niche is swing trading. And I do some trades that I'll hold on to for a couple of months and some trades that are day trades. But in general, my niche is swing trading, which is about 3 days to 3 weeks in a slowly uptrending bull market. Okay, that's kind of the sweet spot. Those are the period chunks of time where the markets are moving. We want to be in it and then out of it once it starts to consolidate again and rotate from that over and over. But what happens in this kind of market is that this compresses down from 3 days to 3 weeks to 3 hours to 3 days. Okay, even for downside moves, because what happens, believe it or not, in a down market, okay, you'll get a huge move down, but over the course of 3 days, you could get a rally that goes straight up and retraces nearly all of that. Okay, that does not happen in bull markets. In bull markets, you get a slow move up over a couple of weeks, and then maybe a couple day pullback, and then a slow move up for a couple of weeks. This is much more violent. You could short something, have tons of money in place at the end of the day, and the next day it's all gone. Okay, so you've got to take that into account. This looks like a pair of underwear. So while in a bull market, I do tend to stay away from shorting corrective moves. Okay, I don't like the counter trend trade in a bull market because, why bother? In this type of market, I absolutely want to trade both sides of the market, okay? Because both the down moves and the up moves are more violent. Believe it or not, in a down market, the rallies are more fun to trade when you catch them. Why? Because not only do you have people buying the dip, you've also got people covering their short trades. That's why you get these explosive moves like we did on, I think it was Tuesday, where the markets just keep going higher and higher and higher based on some unexpected move because you've got all these people that are short, all right? So the key with this environment is simply understanding conviction, okay? You've got to understand conviction. And the key with understand conviction is not to get confused with your own conviction, okay? 70% of us think the markets are going to fall, but we've got to ask ourselves the question, what happens if it doesn't? What happens if that squeeze on the daily chart does in fact go to the long side? And are we going to get clobbered with based on how our portfolio is positioned, okay? More importantly, we want to understand if a move, while we may have conviction that something's going to happen, what we want is the market to let us know if it has conviction or not, okay? So the key with this is that if you get married to your own conviction in this type of environment, it can really hurt you. Really, it can hurt you because the brain, the eyes only see and the brain only looks for what our will is, right? If we're very, very bearish, then the only things we're going to see, no matter what's going on in the market, are signs that it's bearish, right? We're going to ignore any warning signals. So we got to be careful of that. So instead of trying to impose your will on the market, you want to instead attach yourself to the market and flow with it. Okay, attach yourself to the market and flow with it. So how do we do that? Because if you don't do that, you're going to be out of sync. You're going to be shorting lows, you'll be buying the highs, and these moves are so fast that by the time you wait to see if that there's going to be some confirmation in the move at that point will already be over. Okay, you got to get used to getting into these moves a little bit earlier, and at the same time getting out of these moves a little bit earlier and recognizing if it's going to be a base hit, okay, or if there's got the potential for a home run. Okay, this is super important. By the time a trade is safe to take, it usually means that the move is over. Okay, whereas bull markets are very forgiving. In this environment, it is all about getting in sooner, getting out sooner, and knowing when to understand how to read price action. Okay, you don't need any fancy tools or anything like that. You've just got to understand price action. And something's going up, like so here, like right here, right? You can see that okay, the this market, this is Chipotle's. It came up, but it was, and so the question is why? How could you tell that just from the price action, right? And here it came up, right? And here again, it came up, it was not able to break through, instead it fell. But here, like the 1, 2, 3, 4, 5, the sixth time, not only did it break through, it rallied another $60. Okay, so how do you tell that from looking at this price action? All right, and even better, when we came down here and we tested support, why instead of it bouncing, okay, why did it not only break but keep going? So there's always bad news on something. There's always good news on something. But how do you know that the conviction is there in the markets? Okay, well, if you understand price action, you can start watching this really closely and to say, well, gosh, I can see that, when we broke out here, we closed our highs, we closed at the highs, we closed at the highs. And then when we closed here at the lows, the volume was lower. So there's still some potential here. And then when we closed here at the highs and the highs, we got 2 in a row. And so the third bar wasn't as critical, right? And if you understand this price structure, you can read that. At our lows, and every time we popped up, there was distribution. And then when this broke, why did it keep going straight down? How did we know that this wasn't going to be a reversal like it was here? Okay, and would keep going straight down. Well, if you understand price structure, great. You can just stare at this price all day long and just move with that. And so what I thought with this would be, easier, I guess, is the way I would look at it, is that, I think it's important just to find a way to make this a little bit easier. Okay, so emotions and convictions can turn on a dime. And while that was an example of Chipotle's, that's also what we're seeing in individual markets right now as well, whether it's the NASDAQ or whether it's Amazon or whether it's, Shopify. And if you're experienced and you've been doing this, you can stare at the price action itself and engage the intensity of the action by watching where the price bar closes, where the momentum closes, and whether or not volume is above or below average. And then you compare that to the prior 2 bars, and then you can project forward as to what may happen next. Okay, and that's essentially the art of tape reading. It's the art of price. And if you're familiar with that, it's not super difficult to do. It just takes some time. Now, since I have access to Eric he had the ThinkScriptor platform, and he's this super fighter pilot, nuclear physicist guy that can kind of craft anything. I always like to ask him and say, hey, Eric, I'm looking at all this stuff. Is there a way to make this easier? Is there a way that I could say, hey, Dylan's my 7-year-old, I want you to look at this, and based on some very, very simple tools, you'll be able to understand whether this thing is going to go significantly higher, whether it's a dud, or whether it's going to go significantly lower, and then you can place some trades to make money for your apps. Okay, that's how easy I wanted it to be. So the answer to that is, now here we can look at these 2 charts side by side, and you'll see things now are a little different. So again, if you understand how to read price structure and things like that, you'll know that this is all neutral price action, okay? Because we don't have 3 bars in a row closing. We don't have momentum above a specific level. We don't have enough volume in here. And so what happens over here is Eric takes all that information and says, great, if this is a neutral market based on these 5 different inputs, then the bars will be yellow. Okay, great. Now what's interesting here is then, if it breaks out here, how to tell if it's going to keep on going. Well, you can do all this stuff, you can all this, but if the conviction here, it turns extremely bullish, okay, and the momentum turns extremely bullish, this is going to turn green. And then if there's some conviction in there, you're going to see these dots. And when you see that, you don't want to fight it, okay? You don't want to fight it. But more importantly is when that ends and this goes back to yellow, it's over, okay? And again, you don't need like a fancy tool like this if you understand how to read price action. Just read the price action. It's right there. But something like this I like because I don't have to study it very much. It's just telling me, it's doing the work for me. And then what's great here is that once you get into red momentum with conviction, it's all over. This is what a crash looks like. Whether this is the NASDAQ or whether this is Amazon.bomb or whatever it is, that is exactly what a crash looks like. You have the momentum switch, and then you get conviction piled on top of conviction. Okay, so again, to me, it's just easier. It's a lot less work. It saves time, and that's why I like tools like that. So even today, okay, and again, I'm not a day trader, but I can look at a 5-minute chart of the NASDAQ or a key stock like Amazon and get a good sense of what the overall market is doing. So if you're looking at Amazon today and you understand how to read price, great. Here we've got close at the low, close the low, close at the low, 3 bars in a row, okay? You've got steady sideways action here with no short covering. Boom, we keep going lower. We get a rally here, but you can see here there's no conviction in there because price is not closing at its highs on every bar. This results in it rolling over. We make new lows. We stop out the longs, but then a strange things happen, okay? Instead of it continuing its downtrend, suddenly it rips higher. All right, again, if you're a student of price action, great. You can stare at this and you can just read the tape and get a feel of that. But I want my 7-year-old to be able to do that as well. So now we flash forward to the same chart with Eric's tool on it, and it's like, okay, neutral, neutral, neutral. You're certainly not buying. Once you break through this with conviction, the assumption is that this is going to continue, okay? You can see we get the rally here, but we never turn back to neutral. We never turn back to neutral. Boom, we get new lows. But you can see here now we get this, the volume dries up, and once the momentum shifts, okay, like if you're short, you've got to get out. And then once you see this happen and you get conviction, that's the beginning of a short covering rally. And you can see Amazon goes from 948 to 958 in like 38 minutes today. Okay, that's the kind of stuff that's beautiful, and that's the kind of stuff that in this kind of market is going to happen all the time. Okay, and it's very easy to get complacent without something like this. And if you're here and you're short and say, wow, I'm holding on until Amazon goes to $900, okay, well, that's great. But then you get a situation like this, where suddenly now you're stopped out. You had a very profitable trade, you're making a ton of money, and it's gone in a blink of an eye because you're not correctly interpreting the price action that's happening at the moment. Okay, so this is a tool that can help with that. Same thing with the NASDAQ, okay? Over yesterday, we had this light rally with no conviction, okay, except toward the very end of the day when there was some short covering. And then boom, we get or early this morning, and then we get the big puke. But once the conviction dries up, okay, if there's without conviction, in lieu of conviction, what's going to happen is it's going to retrace, okay? And you can see without the conviction, we just start to retrace, and that's when we're going to do a normal fib retracement, okay? You don't buy this. If you're short, you cover, but you don't reverse and buy it like you would something like an Amazon. Shopify, this is a great example of when a base hit can turn into a home run. And here we are, Shopify's got a squeeze. It looks pretty great, and we've got these yellow bars, which means it's neutral. And it's a beautiful thing with the squeeze because you can combine it with this and say, great, if you've got this, and then you turn into momentum with conviction, great things can happen. So you see something like this, you can either add to it, like, wow, it's still got some room left. But more importantly, if you've got a small base hit target, you're getting here at 95, and you're like, okay, I'm going to get out at 98. There is no reason to sell. You hold on for a potential home run, okay? So anyway, hopefully that all makes sense. And we're going to dive in, and we're going to look at some more more markets and stuff like that too. But, there was just some questions about that. But the main thing is that, right now we are, the markets have been drifting upward for some time now. Slow grinding markets are the easiest markets to make money in, okay? All you got to do is buy and hold on. You don't need a perfect entry in any way, shape, or form. But as we get more volatile, the strategy will not work, and in fact, it will skewer you. Okay, you've got to be able to adapt more quickly. If you're working full time, that's great. It's not one of those things where you don't have to play the 5-minute charts, but you still want to understand the nature of the potential for these retracements. Okay, So the good news is you don't actually really need to understand what's going on at all in order to profit from the volatility that's happening in the markets. Okay, and I'm going to go in and I want to show you some of the internals that we're looking at and show you some of the other setups that we're going to do. But all you have to do is once you learn the stuff is just it's a remora. Okay, and the remora is a fish that's not a good hunter. Okay, doesn't really know what's going to happen next. So what he or she does is attaches himself to the institutional trader. The institutional trader, the shark, has access to more information. And so when the institutional trader is feeding and in a feeding frenzy, we just want to attach ourselves to it. So instead of us having conviction and thinking the market's going to do something, okay, all we're going to do is just attach ourselves to the institutions, attach ourselves to the market, and hold on for the ride. It makes it so much easier. That makes it so much less emotional, okay, because it's not about, oh my God, this thing's going against me. My mom said I'd never amount to anything. I can't get out of it. No, it's just, oh, okay, it was green. Now it's yellow. So I'm just going to get out and I'm going to wait for the next signal. And so it just makes it so much easier. So hopefully that, I don't know if all that makes, just wanted to dive into some of that stuff. And, a question here is, what we want to look at is momentum versus conviction. Okay. And so here's Google, 15-minute chart of Google. And again, if you understand price action, you can look at this and say, okay, wow, well, based on this pattern and this break here, we can extend this down and all that kind of stuff. And that's great. But what I like to look at is on something like this, where you don't have to completely understand what's happening. So here we break, right, and we come down, but as long as we're showing conviction, we're going to look for this thing going down. And the beautiful thing here is about when you get momentum and conviction, what you're looking for is a greater than expected move, and that's how you make the most money on options. If you trade futures, I love doing this for like NASDAQ futures and S&P futures, and even yen and gold futures, because the same principle applies. And then on something like this, when you can see, wow, here's a breakout, okay, but there's a breakout with no conviction, okay, the dots represent conviction, that is going to be a failed breakout. And so on something like this, if you're excited about Google and it breaks out and you want to buy it, this is a red flag. And maybe you have it, but it's like there's no conviction. Well, guess what? That's not going to last long. So that's called a base hit. Get a couple of points and get out, okay? Conviction, you hold on until the conviction dries up. That's where you can get your potential home runs. All right. The other thing that's really, really important on something like that too, and so the Russell has been like this all year, is that if you've got a market that doesn't have a lot of conviction, and the Russell this entire year, even though it's had some good moves, has actually been operating out of conviction. And in this kind of market, great. This is where you do iron condors. This is where you do your income plays. This is where you're looking for theta decay, but you are not looking for greater than expected moves and taking advantage of directional options. Okay? Yes, you do here, you do there. But when you go into this mode, some of the best trades that you'll ever do in your life are the ones that you never do, right? It's like, oh, wow, the Russell's breaking out here. I think I'll load up on it. Well, no, because there's no conviction. There's no muscle. There's no institutions behind this move. Okay, and that's the kind of stuff that I find very intriguing. I talked earlier about the $1 million trade in Tesla. Now, of course, I would love to do that again, and here's exactly what I look for. Okay, in this case, and what I remember this, because I remember this like the week prior, I was watching, and we broke out and we got some conviction, and I bought it, and the next day it started to lose momentum. And I remember this because I was like, man, I really think Tesla's going to go a lot higher, but it wasn't working. And so I just closed it out. Now imagine had I bought a bunch of calls, at 155 and I just held on to 135, that'd be devastating. Okay. Now I didn't short it. I didn't want to short Tesla. I knew the stock had high short interest. I'm just watching this and I'm watching this. And it's like, well, okay, here we go again. So now we get going again. And this came up on my radar right here. And it's like, wow, there's still volume coming in, and started getting in this at 150 and scaling in. And that's what turned into the $1 million trade. And the only reason I was able to hold on to it was because the momentum and the conviction were married on this trade. Okay, they were married on this trade. When that happens, it's gold, and you just hold on for the ride. Okay. And for a lot of last year, Tesla was not like that. Last year Tesla was kind of a crap market to trade, whereas this year it's been great because it's had a lot of conviction. So so that's what we're looking at there. So let me show you this real quick. I want to talk a little bit about the class I'm doing on Saturday, and then we're going to dive in because I want to show you guys some internals, and I want to talk about kind of what I think the markets are going to be doing as well. So if we look at oh, and by the way, we're not sure yet. I'm looking to see if once we get this on Thinkorswim, if we'll be able to use it on the mobile app. But this is Avery, my daughter. Here, I'm trying to set up charts for her so that are so simple to read that she can do it without really understanding what's going on. And so this is the tool that I'm using for her. And so like once a week, she likes to sit down, look at a 5-minute chart. She'll pick a stock and just trade 100 shares because all she wants to do is make $100 so she can have enough money to buy her app upgrades on her iPad for the week, because I will not buy them for her. She has to earn the money somehow, and she can either do chores or she can trade, and she actually prefers to trade, so it's kind of fun. So so here is what I'm going to be doing on Saturday, and then let's dive in and we'll look at some of the other stuff here too. So on Saturday here, let me just bring this up. On Saturday, we're going to be doing and by we, I mean myself, it's going to be a basic, and it says basic, but we're going to go through, it's kind of soup to nuts, and talk about, first of all, remember, the markets have changed. So I'm going to talk about specifically how the markets have changed and how you have to adjust your trading for this type of a market, okay? In down markets, in up markets, there's a style of trading that works, and it does not work in the type of environment we are in now. Okay, we have to get in trades a little bit sooner than we normally would, and we have to know when to get out of a trade sooner and when to hold on for a ride. NVIDIA is a good example. This was a trade I did yesterday and got out today. I only made about $1.10 on the options. I was hoping to make more, but it was simply a base hit. All I was doing was following this tool, okay? So I'm also going to be talking about the big picture outlook, what to expect for the rest of the year on a macro level so we can be prepared for any big moves that are happening. I'm going to have a checklist on the setups that I'm going to be looking for that take advantage of tools like this. Now, in terms of the class, it'll also be recorded. You'll get a copy of the indicator. Right now we have this for Thinkorswim, for TradeStation, for NinjaTrader 7. For those of you that don't have those platforms, we're also going to have it for TradingView. But keep in mind, if you've got Schwab or Fidelity, I'll also show you the guts of this indicator. Okay, so you can recreate it yourself. You won't be able to do the paint bars yourself, but I'll show you all the tools that combine in it so you can see what to look at, and you can put those on your chart. For those of you that are newer, if you don't understand options, you'll get an options foundation course and a back to basics course. Okay. So that one's gonna be a lot of fun. I'll talk about these here more in a second. This is more if you wanna do some live trading. The live trading is where you can look over my shoulder in an online environment as I'm placing trades, and you can do it yourself. All right, so let's dive back in here. Let me, I will keep this up here, and then I just wanna make sure and see what kind of questions you guys have, and I do wanna spend some time looking at a few other things here in the markets as well. So here is the link for the class. And if you have questions, you can call us here. And then let me see what questions you guys have, because I'll show you a couple things that I'm looking at here. Oh, okay. So what is the follow-up day? So yeah, let me bring here. I'll bring the page up too. Well, and there's a couple of cool things on here too. So if you go to the page, and somebody had asked earlier why they couldn't pay with PayPal, and you should be able to now if you want to do that. But so if you go down here, and by the way, these are some of the things, I don't mean to gloss over what we're going to be doing on Saturday, but we're going to be talking about specifically with a checklist how to tell when a stock is likely to explode or implode, okay, and how to trade it. We're going to talk about the guts behind the indicator, so you understand why it does what it does. identify potential black swan events in real time, because I think we're going to get one in September, October. You're either going to be on the right side of that and it's going to make your year, or you're going to be on the wrong side of it and it's going to be a very good day for the makers of Belvedere. Kind of going back on some of those bigger trades, how they work, so you can understand how to model that, when to say no, stay out of the market, obviously when to be long or short, and how to tell a base hit from a home run in advance. Very, very important. Biggest problem I hear of a lot of traders is they're just getting out too soon. That is a very bad habit, because if you're getting out too soon, it typically means you're also holding on to losers much too long. Now, one thing to keep in mind here that was not on that other page is that we've also added, after talking to people, a scanner, okay? And the scanner specifically looks for explosive moves as well as 10x moves. And I'll be talking about those. If you guys are familiar with the DMI explosion, that's one of the setups that we're going to be adding to the scanner in addition to the 10x bars. So the professional package for $997 will include, of course, everything on Saturday, plus 3 days of live trading, a follow-up day. I'm not exactly sure when that follow-up day is. I'll double check. But the idea with that is that you have, a week or two of being able to do this on your own, and then we have a follow-up day where you can come back and answer questions. And then, of course, you would get 3 months of access to this new specific 10x scan. Okay. Now, if you don't have or know about our scanner, we also have a full-fledged scanner that's got about 20 other scans on it. And if you like to save time and just, if you're working, or if you just want to push a button and have these setups in your, just kind of a list of them, that's what the scanner is. And so this actually includes the 20 plus scans that we already have on it, plus the 10x scans and things like that too. So that's what that is there. Does it work for candlesticks or just bar charts? You can put it on candlesticks as well. I like bar charts with it, but yeah, either one's fine. Okay, so from the time your class starts on Saturday, how long will be taken to cover interactive strategy class and 10x bar indicator? Well, so the class is scheduled to go for, I believe, 4 hours. So I've divided it into chunks of time. Some parts of that may last longer based on questions. So I try to allow enough time that, I can explain it fully, and then you can also have time to answer questions. What brokers have the 10x indicator? Well, there isn't a broker that has it, but we've created the indicator for Thinkorswim, TradeStation, NinjaTrader 7. If you don't have one of those, that's fine. So again, on Saturday, I'll kind of show you the guts of the indicator, but you can also watch it. We can also put it on TradingView. Okay, so if one registers for the professional level and can't make the live trading days, are there any alternate days to participate? So that's a really good question. There's not any alternate dates. However, here's what I found, and from talking to people who have signed up to do the live trading but couldn't participate because they had other commitments. And what they said is that they would just go and they would obviously just watch the recordings later. And what they said is just being able to watch the recording significantly helped them understand when to use it, what to look for. We're doing trades live, so you can see what is the actual cue to pull the trigger and stuff like that as well. Let's see. All right. So just going through the questions here. Is the scanner separate from the simpler trading scanner? Initially, yes, it is being set up just for this class. And usually what we do when we have a new scan like that, we'll eventually merge it into that scanner. And it's a little, and you can just call, if you've got the scanner, you can just call, just double check with them and see how what's going down there. All right, so let me look through here. Let me see, where is this? All right, so there's that one. Let me move this over here so I can see the questions. Oh, can you look at AA on this one? Sure. So you'll see here on symbol AA, you started, it's right in the middle of it right now. So you've got momentum here, and now you've got conviction, and this thing's just off and running. I think Boeing's the same way. Yeah. So, some stocks right now are, they do have a lot of conviction to the upside, and then some don't. And so any long trades I'm in, I want to make sure that they do have conviction. Absolutely. Because essentially, as long as the market is convinced it's going to do something, the longer we want to hold on for the ride. What is the name of the 3-color indicator? I cannot find it on Thinkorswim. Okay, so it's not on Thinkorswim. It is a piece of software that we have created and that we give to you with the class. So it comes with the class. Is it good for day trading? It is amazing for day trading. I like it for swing trading, but when I'm day trading in this kind of environment, kind of like, I was actively trading in 2008, and I was using like 7 different indicators to follow what was going on, and the action was hot and heavy. And I'm not looking for a 2008, but I am looking for some volatility. And it's, to me, I actually am looking forward to the volatility with having a tool like this, because it'll make it so much easier. All right, let's see what else we got cooking here. Oh, Red Hat. This is a really nice 30-minute squeeze here in Red Hat. So you can see, we came up, we had a little move, and now we're kind of trading sideways, and we break out with a squeeze. Okay, and I love these because you can kind of get into this. And what you're looking for here, and for those of you that don't know the squeeze, it's something that can turn into something. It can force some short covering. And then you can see it's like it comes up here, and then, boom, we just kind of get going. But what's important to understand is that in this kind of a market, it gets so volatile that there's going to be a lot of moves that with no squeeze. Okay, there's not going to be enough time for a squeeze to develop, and so this is the kind of tool that you need to be able to catch those moves. To catch those ebbs and flows, because they're not going to quiet down enough all the time to give us a squeeze. Looks like the TTM trend study. Is it similar? Okay, great question. So the TTM trend is based on what's called the Heikin-Ashi bar, which is based just on price, okay? And it's either bullish or bearish, and there is no neutral. This is a combination of price, volume, momentum, and the ADX, and a couple of other things. And so it gives us a lot more tools. First of all, it will show us conviction, which is fantastic. When you get momentum and conviction, that's really the great stuff. But more importantly, it shows you when the market is neutral, okay? And a neutral market is actually, there's a lot of stuff you can do with the market when it's neutral, as long as you understand that it's neutral. But yeah, the TTM trend study I like. The only downside of it is it's either bullish or bearish. It doesn't take into account a neutral reading, and it doesn't measure conviction. It can be lightly bullish and it's still blue. It can be hugely bullish and it's still blue. This one, if it's bullish, it'll be green. If it's hugely bullish, it's green with the dots. If it's bearish, it's red. If it's hugely bearish, it's red with the dots. And you very rarely get what I would call conviction and neutral. I actually really like it with the MT trend. Absolutely. Yeah, and the nice thing too is if you guys are familiar with our scanner, it is now our scanner is you can see it mobile. There's actually some really, let me see if I'll even bring it up here real quick. You can see what it looks like. If I can remember my password. Yeah, and usually too, and it's like, I never like to say like, oh, don't worry, this is what's going to happen during the live class, but the last like 11 live trading classes, we've been able to make enough money trading one lots during the live trading to pay for the course. So it's not, you never know what the market's going to be like, but that's, there's obviously a lot of focus on it. And it's obviously that's pretty fun when I can do that. So on simpler trading, I can come over here and just look at the scanner. And then, obviously there's daily scans and different things like that. But what you'll see is that, well, for this scan, there'll be some new scans added down here that'll show 10x bars, that'll show all that kind of stuff. So you can get there too. I'm kind of curious if there's any daily pop candidates for tomorrow. If we align these by high short interest, wow, this is a new one, IMMU. We got VMware, MyGen, pretty good. But yeah, it's nice because then these things will just pop right out. All right, let's see what other questions you guys have. All right, so I'm a little behind on the questions here. So yeah, does it work on stocks under $10? Yeah, it works on, it's kind of, anything with the chart. I mean, if we bring this up here and just say, okay, let's compare, a couple different things here. So let's look at a, 15-minute chart of, the S&Ps. Okay, so how did they act today on a 15-minute chart? Well, they're kind of all over the place. And this is the kind of stuff I like to look for, where you get, like, say, a rally with no conviction, a little bit of conviction up here, but you can see how quickly those can fade away, right? Or if we look at, say, 6J, the yen today, fairly quiet for the most part. You can see after hours here, the yen's actually selling off a little bit, so that's kind of interesting. Looking at, let's see what the euro is doing for those of you that like futures. I'm assuming right now it's pretty quiet. Yep. And then if we look at, say, this, and so what I find too is nice because, like, I mean, Shopify has been insane, right? It was at $94 a couple of days ago, but it can be really, really hard to hold on to a move like this. But what happens is that when you're in a move like this and you see, it's just like a relief. It's like, oh yes, okay. There's no reason, to, like, is it gonna? Here's resistance. Guess what? It's gonna go right through it. Okay. If it rallies up to resistance with no conviction dots, it's gonna halt. So it's really, whether you're using voodoo lines, Carolyn's levels, it's a very complementary tool with this, because if you're coming up to a level and there's no conviction, guess what? That level, the odds of that level holding are extremely high. But if we're coming up to a level and there's conviction, guess what? We're most likely going to blow right through it. Okay, and it's just super helpful that way. What is the difference between the simpler trading formula class and the gold membership? Okay, so the formula, so this is for an actual class that we're doing. So this is a class that is focused on teaching you a very specific strategy, and is a strategy that we'll be utilizing in our gold room. The gold room is where we call out trades. So the gold room is a subscription where, if you do the class and then afterwards you want to have kind of a trading community, you want to have get trade alerts, things like that, see what I'm doing, see what Henry's doing and Bruce is doing. That's what that's for. It's kind of like an ongoing trade alert service. And then this formula is a class that's teaching a very specific setup and skill set for this current market environment. All right. Okay, let's see. You know what? And actually, I did talk to Sawsnoff today, and he is looking at seeing if we can get this one coded for Tasty as well. My computer's freaking out just a little bit here. How do I determine momentum and conviction? So I've got about a 30-minute presentation on momentum and conviction that we'll go through on Saturday, so that when we get through that, you'll know exactly what that means and how to find it. Do I need programming experience to recreate? That's a good question. And the answer to that question is I don't know exactly what it would take to turn the guts into the paint bars on TC2000 because I don't use it, but I'll show you the guts and all the different indicators are involved so you can actually put it on your chart and see it. Yeah, what is Ulta doing after hours? Yeah, I bought some stock after hours at $214. I should probably get rid of it. We'll see where it is tomorrow. Does the indicator work for the indexes? Yes, I was watching it on the NASDAQ futures today, and it was really helpful to see when the volume on the NASDAQ futures dried up to the downside. Because when the conviction dries up, guess what? The selling stops. And it's, if you guys have ever been in a short trade, like Amazon or the NASDAQ today, and it all looks good, and then 30 minutes later, it completely reverses, and you don't know what hit you, this is the tool that can help you with that. First Brain, can you, if someone can take a look at First Brain's post, he just said that he tried to order the basic course and via PayPal, and then wasn't sure if it went through or not. Did the whole procedure with PayPal, and then after that, I was sent back to your site, and then back to the order page. And if someone can just double check on that with PayPal, that would be fantastic. Thank you. And let's see. This is text there. Yeah, and you'll see here too, in the scanner, we've got our normal scans here, but then you'll see what'll pop up with the class is that you're going to have daily DMI explosions, daily 10x up, daily 10x down. These are going to be very, very useful for finding these things that get into conviction. Oh, sure, Stephen. Yeah, I actually really like it with futures. So let's a lot of the stuff I base on momentum trading, and then just apply it to options. Apply it to things that have options on it. So if we look at okay, let's see here. So for example, here's the NASDAQ futures. And of course it depends, what time frames and stuff you're trading. On a daily chart, it's neutral. On a 30-minute chart, you can see conviction here to the upside. So when you see something like this, first of all, you can hang on for the ride. It's going to last. It's going to break through resistance. It's a lot of short covering. Okay. Versus if you get a rally like this with no conviction, it's typically going to end in sadness. And then today, like on that 5-minute chart, you can see once the conviction dried up here, that's when you get the short covering. And then when the short covering, that's where to me, like, the ebbs and flows are great. And if you're day trading with futures, it's a really useful tool. How long have I been using the indicator? So this is an indicator that has been coded recently. Prior to that, I was looking at, it was 1, 2, 3, 4, 5, 6 different indicators to kind of get the same thing. And a lot of times I missed a lot of stuff just because it was a pain to look at all those indicators. And so it's really, as the market started changing again, I was like, all right, Eric, there's got to be a way to do this, like on a paint bar or something. And he's like, yeah, why didn't you ask me that like 2 years ago? It's like, so yeah. And so I'm very excited about it. So, and it works really good with the squeeze, obviously. The other thing, though, is that when you're going to see in this type of environment, there's going to be a lot of, in a quiet bull market, that's what we're waiting for, is a squeeze. But in this kind of environment, it's so volatile, we're not going to get as many squeezes. And so this is kind of what we can use just to, like, okay, we just want to catch conviction. Like, if there's a squeeze, great, but there's not going to be a squeeze every day when the markets are going, violently back and forth. All right. And let me see here. Let me see if I got my scrolling window here is freaking out on me. Oh, here we go. Are most of your trades options, or do you also go long and short on stocks? Okay, so Richard, good question. So all of my analysis is on the underlying. So when I've got a setup that says, okay, short Facebook, then I can either short the stock itself or buy puts on it. So although a lot of times I will look for opportunities to utilize options, it's meant actually to be on the stock. So it's not scanning for, option Greeks. All it is the underlying. So once you have signals on the underlying, there's a lot of different things you could do, whether it's just with the stock itself, or applying an option strategy to that stock based on the signal. Let's see. Are you prepared for the hurricane on Saturday? Yeah, so it's interesting is we're in Austin. Of course, we're three and a half hours from the Gulf Coast, so we're not, in theory, we're not in danger of any flooding, or any hurricanes. But there are flood advisories, so we could be swimming to the office on Saturday, which could be a lot of fun. During the live trading, will you do day trades or swing trades? And the answer to that is yes, meaning that we'll be doing both. So I'll be looking at setting up some swing trades, with the idea that we could hold it for a couple of days or longer, but also doing some trades where specifically we're getting in and out the same day. Although I'm going to be focusing on options, I will also do some futures trades. Now, if I'm doing futures trades, I will do trades that could also be optioned on an underlying ETF, i.e., hey, here's a trade on the NASDAQ futures. I'm shorting the futures. Well, we can also, and I will also buy puts on the Qs, okay? Or if I'm buying Euro futures, we can buy calls on FXE. But mostly what I'll be looking at is, the NVIDIAs of the world, the Shopifys of the world, and seeing if we can get some momentum type conviction setups in those issues. Is this similar to the early in and out indicator? So the early in and out indicator is only measuring the momentum of the squeeze. So it's a good question. So that it's it's a completely different set. The only thing that we're looking at on the early in and out indicator is the squeeze about to fire or not? Let's see. And I'm just scrolling through the questions here. Okay, so what are the best times to set the indicator to? So the two I like to watch the most are the daily and the 30-minute. So on a daily, you're obviously going to be catching any bigger moves. On a 30-minute chart, you're going to catch the ebbs and flows as the daily shifts. So in a slow-moving bull market, I'm more apt to look at a weekly chart and a daily chart. In this type of environment, daily and the 30 are my go-to. And then I'll even drill down to the 5. Like today in Amazon, I was watching that 5-minute chart, and it showed when the conviction to the downside dried up and when the shorts started to panic. And that kind of stuff is priceless for intraday. And that's the kind of stuff too that'll help with NASDAQ futures when you see like a key stock on the NASDAQ like that where there's panic short covering. What is the difference between your scanner tool and the screener research tools on TD Ameritrade? So the screener research tools on TD Ameritrade are great, and I actually use some of those. What we did the scanner for was to add things that what they weren't doing or that they couldn't do. So they're not looking for high short interest candidates, or they're not looking, or with a squeeze, like different things like that. And so we ended up creating a scanner just because there's scans that we wanted to do that we couldn't do. So it's like, all right, well, we'll just create that ourselves. Yeah, if you've got Fidelity Active Trader Pro, we don't have the indicator coded for it, but during the class, I'm going to show you exactly how the setups work, and I'm also going to show you how the tool is created so you can actually recreate all the different indicators on your platform. And also, too, of course, you'll, with the scanner and stuff like that, you'll be able to, that'll help you find in trades and stuff like that. What is the difference between the 10x bar indicator and the 10x scan access? So the indicator is whatever chart you're looking at, you can look at it and see what's going on. Okay, is it neutral? Is it bullish with conviction? Is it bearish? Is it bearish with conviction? The scanner finds moments in time where it's happening. So you can sit there and say, okay, I want to find something that has bullish conviction. Boom, you hit the scanner and it gives you a ranking of everything that's in bullish conviction. Does that make sense? So if you like to trade, like say NVIDIA, great, you're going to put NVIDIA on that chart and you're just going to look at that. If you're looking and it's like, okay, it's yellow, we're waiting for green with conviction. Or you can also with the scanner to say, you know what else is out there with green with conviction? I want to take a look at it. Or what is out there with, bearish with conviction? I want to see that too. And so the scanner kind of helps pinpoint stocks that are in that mode. Yeah, indexes, ETFs, absolutely. Absolutely. Does it work by itself, or do we need other indicators to confirm the conviction? Now, the nice thing about this is that it absolutely works by itself. Can you use it, like say with the squeeze and the voodoo lines, which are two of my favorite indicators? Absolutely. It complements it. But this is one of those rare tools where it can be a standalone. If you just want to trade the price action, you just want to trade that conviction or lack of conviction, that's the most important thing, right? Price, momentum, and volume. And if you can look at it in such a way that it's painting a very clear picture of what could potentially happen next, whether it's a base hit, whether this move is about to end, whether the conviction is only just beginning, it just helps you so much with trade management. And that's the biggest thing I see people, either they get married to a bad idea, You're like, oh God, this market's going up, this market's going down, or they get scared out of trades way too soon. And this is just a tool to help with that. Let's see here. All right, I think there's just a lot of questions I'm trying to get caught up with here. So, yeah, so well, some of the stuff here too, like if we look at here, we can look at some multiple time frames here. Where do things get interesting? So if you look at, say, something like Boeing, okay, Boeing has had conviction since 195 on a daily chart, okay, and then you can sit there if you want to trade it, a little shorter term, you can drill down to the 30-minute chart and kind of see the odds and ends. But when I see something like this, it's just like, okay, well, gosh, there's nothing I want to do but buy Boeing, right? If we look at YY, this is a stock that we were watching earlier, and this is really, really fantastic in terms of here we had a squeeze, we had a nice move, and then it turns into momentum, which turns into conviction. Just a very, very incredible rolling. So what happens a lot of times is people will look at something like this and say, boy, it's extended, I can't get it. I can't get into that. It's extended. The truth of the matter is it's just getting started. Okay, and so it helps give you a different perspective on some of the things like that are happening. If we took a look at Alibaba, yes, this thing is extended, and yes, it's going. Today is the first day on a 30-minute chart that I saw some signs that momentum is running out. Okay, so here we have momentum, red bars. All right, that's the first sign that momentum is running out. Now, that doesn't mean that it's going to go down. It just means that if I was long Alibaba, I would not want to be long anymore. Okay, it's like time for it to catch its breath. Is this useful in a slow and steady bull market? Well, so in a slow and steady bull market, it'll help you gauge the kind of the strength of the move, okay? So if we look here at a daily chart of the Qs, and you can see recently it's just been kind of, well, there's some upside conviction, there's some downside conviction, what's going on here. But when you've got periods like this where it's like, wow, we have a squeeze, we're neutral, and then when you go into conviction mode, there's times to kind of really get aggressive, right? It's just like, man, it's during those times. And then here, what I like about this is you can see like, okay, wow, we sold off here and now we're going higher again. Well, there's no conviction. And if there's no conviction, the markets are not going to go higher for very long. And so what happened here is that it held the retracement. Okay, if you're familiar with Fibonacci retracements, this is always like, gosh, which ones are going to hold and all that kind of fun stuff. Well, if you look at this, we went right into the 786 retracement right there on no conviction. Well, guess what? It held and rolled over. When you've got conviction, you're going to blow right through it. All right, and that's the kind of stuff I find that's super helpful. Is the market neutral? And even in a slow bull market, if it's neutral, then guess what? It's going to be better to focus on selling put spreads. If you've got some momentum behind it, yes, great, let's buy some calls. Okay. All right. I think that is good. All right. So yeah, so I see a lot of other questions here. So a lot of the questions here, and I'm going to dive into this in depth on Saturday. So I think this is the kind of thing where, again, sometimes people ask, it's like, well, why do I need another tool? And if you're looking at this and saying, John, I don't need a tool like that, then you don't need a tool like this. If you're very comfortable with just reading the price action and understanding, it's like, okay, there's conviction and stuff like that, then you absolutely don't need this tool. I find something like this is just easier. It saves time. I love the ability to scan for it. I love the idea that my 7-year-old son, 9-year-old daughter can look at this and they can trade it. And it just saves time. And in this kind of a market, I just really want to know when to bail, like NVIDIA. Okay. NVIDIA, it had had some conviction yesterday. It ran out of conviction today. I bailed. Now, had it stayed with conviction today, I could have held on to it. So great. I make a little bit of money, no harm, no foul, but I'm not getting out too soon. I'm simply just following the footsteps of the market. Okay. That's the kind of stuff. It just makes it easier. It's not, you don't have to spend a lot of time holding things that are going against you, because this will tell you fairly quickly, like, it's over, time to move on. Or hold on for the ride. This is just getting started. Yeah, Sherry, it's very awesome for futures. Absolutely. All right. Yeah. So on Saturday, we're definitely going to be talking about the scanner. We're going to obviously be talking about the guts of this indicator, but more importantly, we're going to be talking about how to trade it. Okay. It's like, okay, so at what point do you get in? If you're trading options, what kind of options do you trade? How far out? We're also going to look at some futures setups as well and doing it with that. Okay, so yeah, so it's a good question too, is could you look at something that's an ETF, like an ETF or an actual futures contract? I find that both work fine. So if we come over here and say, okay, here's say the Qs, right? Remove drawing. So here's the Qs on a 30-minute chart. You can see there's a little bit of conviction here. We flush, right, and we head back up. If we look at the NASDAQ, you're going to see a similar pattern, except, of course, the NASDAQ is also providing 24-hour data. So we can see that we've got the conviction to the upside and then a smoother rollover and flush. And these, by the way, are great. So here's my favorite kind of move is you get a conviction move to the upside, and then you can see those dots are conviction, and then you can see that the dots stop. Okay, it's running out of gas. Okay, that's the rollover that can quickly morph into something like this. Okay, and those are fun to trade. Yeah, Sherry, and that's really the idea with this is that if you're, say you wake up because for some reason you're just like, okay, I want to short this market. I'm going to short a rally to resistance, and so you short right there. And with a tool like this, you can quickly see that's the wrong course of action. You just get out. Without it, it's easy to just hold on to this and go, well, it's got to come back down eventually. And then it does come back down eventually. But my gosh, what a lot of pain and suffering and loss of sleep for that to happen. And of course, sometimes it may not happen. It may not come back. And that would be no fun. All right, let me get a couple more questions here. I'll put this back up. Can we use odd times like the 39-minute, et cetera? Yes, absolutely. Okay, okay. And sorry, there's a ton of questions. I'm trying to make sure I get the general gist of them. Okay, that sounds good. Sounds good. So the price portion of it does work on a tick chart, although the conviction part's a little goofy, but that's something that we're looking at. But the price part of it does, yes. Yeah, and if you look at this on TradingView, so here's a screenshot if you guys trade cryptocurrencies. So this is the indicator on TradingView. So on TradingView with Bitcoin, you've got a squeeze that's fired long, and you can see that the momentum is just now turning green. And that's implying that Bitcoin is about to explode higher. So whether you're trading cryptocurrencies or NVIDIA, okay? It's the same principle. It's the same principle, which is great. All right. All right, guys. So again, this is going to be a very in-depth class on Saturday. If you are interested in signing up, I hope you are, because it's going to be, I think, a very small investment on your part to make the rest of your trading year much easier and much more profitable. Simplertrading.com/formula. If you have any questions, you can call us here at 512-266-8659. Now, this page is a lot longer. You can go in and read a lot of the details, but I'll go over the bullets real quick. The basic class, and basic is probably not the right word here. It's really a strategy class. So you're going to be learning the strategy of how to use this and when. You're going to be learning the guts of it. You're going to have checklists on how and when and why to do the trades and when to get out. And we're going to be covering it mostly, well, on the underline. So that underline is stock. So you could be buying or selling the stock, or of course doing option strategies, or doing it straight up futures, okay? You're going to get a recording of this. And of course, it's going to include the indicator itself. And that's a big plus for a lot of people that are interested in that. If for some reason, right now we do have the indicator coded that once you get to class, it'll ask you, hey, do you have Thinkorswim or do you have TradeStation? Or, and if you don't, you can hit neither, or, you know, TradingView or something like that. That's fine. During the class, I'm going to show you exactly how it works and how to construct a raw version of it. You know, like the squeeze, the raw version of it is the Bollinger Bands and the Keltner channels and momentum. And we'll do the same thing with the 10x indicator. So it's not it won't be a secret. I mean, I'll show you what's under the hood, but at least that way you'll be able to recreate it. If you're newer to options, you'll have, and I just ask that if you're newer to options, that you please review these two classes prior to the course, okay? We're going to spend 4 hours together. You're going to make an investment in that time, and I don't want to spend time explaining things that you could find for free on Google, okay? For example, what's a call? What's a put? Those are all terms that you should be comfortable with, and all of the answers to those questions will be in the foundation course and the basics course. The goal of the 4-hour class is to give you information that you cannot find for free on the internet, because it's unique based on not only this tool, but of all the kind of the knowledge of the markets that's been accumulated here over 25 years. The professional class is fun because obviously it includes everything on the Saturday class, but the big part of this is 3 days of live trading. And that's really a huge thing. I mean, just think of it this way. If you're a golfer, or if you're going to play golf on Monday and you've never played golf and you're playing with your boss and you spend the weekend reading 10 books, okay, now you've read all the books on how to play golf, and in your brain, you know how to play golf. Well, what's going to happen when you go to tee off on Monday? You know, it's going to be a horrible hit because you haven't had any actual practice, actual physical practice. And so that's the idea of trading with the live trading. First of all, of course, there's the very, very real possibility that the trades you do will in fact pay for the course itself. Secondly, there is the idea that you can see, you know, it's one thing to look at something in hindsight, to look at a PowerPoint and say, this is where you should get in and this is where you should get out. But what about real time? What do you do in real time? So you'll watch me do it. You can obviously mimic me and follow along, but you'll also have the opportunity to ask questions. Hey, John, I'm looking at the NASDAQ futures. Hey, John, I'm looking at NVIDIA, you know, yada, yada, yada. And I'll do my best to, you know, take a look at as many of those as I can. And also the follow-up day is nice because you'll get a week or a couple of weeks on your own, and then we can kind of come back and see what questions you have. And then the scanner is just going to be helpful because, you know, instead of sitting there and staring at a screen going, where's momentum and conviction, you can scan for it and say, oh, there's momentum and conviction over here. I think I'll go trade that. And then the only difference with the Elite package is if you don't have our scanner, it comes with this new scanner plus our old scanner that's got 20-something scans in it that we use all the time, and it's pretty fantastic. Okay, so so that's what I got. I think that's it. Yeah, and sorry, Neil, if I missed your questions. Yeah, I've just been scrolling through these and making sure. So Saturday we do start at, I'll double check, noon Central. We'll start at noon Central. And then the live trading days will be on the Tuesday, Thursday, and Friday. So there'll be Tuesday, and then we'll have a day off so you can kind of play around with the stuff on your own, and then we'll come back Thursday and Friday ready to rock and roll. Okay? All right, guys. Thanks for joining us tonight. Hope you learned something new. I actually do think that the markets are going to end up selling off. Now, again, I look at it as a 70% probability. So we will be looking at some different things and different strategies to take advantage of it, and also what to do in case it does not sell off. But I do think that we are, and I'm going to spend some time on Saturday reviewing what I call the big picture. And there's some, there's some nasty cycles coming up on the horizon that we don't see very often, and we just want to make sure we understand them and take advantage of them. All right. Yep, and Eric is going to be having a kind of a pre-webinar to talk about, and he'll be there on the Saturday classes too, just to say, look, here's the indicator, this is how it works, make sure all your questions are answered on it from a technical perspective. I work 7 days a week. How can I make it? That's the big part of the reason we record it is not everybody can attend it live, but at least that way you can go back and look at the recordings. All right, guys. Oh, thanks, Bob. All right, guys, have a great night. Thanks for joining us. For those of you in the room, I will see you there tomorrow. Have a good night.